Good morning, traders. Today is the 21st of August, and we are looking at a topping pattern today in the SPY. I tried to highlight this yesterday with my drawings. You can see the upper range drawing, assuming we had some rally into a close Bozu trending bar yesterday or a sell off into the close Bozu trending bar. We did not have a Bozu trending bar yesterday. We stayed within the range that I had highlighted. You can see, I'll try to draw an actual line so we can use it a bit more efficiently. You can see that we had a range in this area and down here in this area. And you can see that we never really exited this range, okay? As much as we wanted to, we never got outside of this range. And because of that, we are still stuck within the range related to actual price action until we get out of this area and this range. We are not going to see markets really try to move. So I'm going to highlight the fact that we are pretty much just stuck into this channel. You can see right here, this is the area that I highlighted yesterday. And now, assuming that we are still stuck within this channel and we are stuck within this range, then the topping pattern today will more than likely result. You can see where we're at right now, 559.44. We're a little bit higher in the market. We had an upper gap up here, or an upper range just below the gap window, just into the area of the gap window. Kind of expect this to roll up again into this lower gap window area and then roll downward into possibly this 558, 559 window again before basing and trying to find some sort of support. So I don't expect a whole lot today as far as movement. I really kind of believe we're going to get a replication of yesterday's sideways range. We are going to likely stay within these ranges. This area here does not matter anymore. This area does not matter. We're going to probably stay within these ranges, like I had mentioned, and we're probably going to get something that's a lot more similar to what you're seeing here in yellow throughout today, setting up some sort of a top, maybe a little higher, maybe up in the 562 area. But really, I think we're just going to be rolling into a sideways trend. Maybe, quite possibly, if we do roll downward, we could end up down in this 557, 558 area by the end of the day. But again, it's going to be a matter of time to see how we have a rollover. There is a lot of news that the economy is contracting. Our friend KD keeps talking about how the jobs numbers are being revised down by maybe 800,000 to 900,000 or more. I've seen this before. It happened many years ago during the Obama administration. They pushed out a whole bunch of jobs data that seemed unbelievable. And then, right before the elections, they came out and said, whoops, we messed up and we have to revise by 700,000 for the past 4 months, and something is wrong. And all of a sudden, the jobs data that everybody thought was really, really strong was really very weak. And it happens around an election. Understand that, the economy kind of grinds to a halt, not completely to a halt, but it really, before an election, there's a lot of uncertainty. And people, particularly consumers and businesses, try to prepare for that uncertainty by, running lean. They don't know what the new policies are, they don't know what's going on. Consumers the same way. They spend when they have to, they don't spend when they don't have to. And, that's kind of where we're at with this. And I think we're looking at a a very solid move into, and you can see here this rotation. So if we were to, roll into this downward trend here, we're going to be looking at a flat downtrend, which will put us kind of like this into the next couple of days, maybe something like this into this harami type shape, this sideways shape. And you know what? This would put us into potentially this lower channeling formation, depending on how we are here. If we end up getting no upward movement over the next 2 or 3 days, I wouldn't be surprised after this topping pattern here. This flagging formation is a maybe. We don't have any confirmation of this. We have a better chance of this flagging formation. I will modify this, set this to a bright blue, and modify this, set this to a bright blue. So understand that we have this flagging formation is much more likely to potentially become real, maybe even closer to this. But again, I'm not going to be too surprised right now if the markets do nothing but roll into this formation. And to be honest with you, if the markets did top this morning, if they did peak out right in this area where we think we're going to open and then roll into downward trending here, that wouldn't surprise me either. So secondarily, understand we could be looking at that type of a move, very narrow, very tight, right down into the 557, 558 area. This is what happens into consolidation. And I think we're going to be looking at, setting up this range. I think this range is going to stay a defining range for the markets into next week. And then we will likely break through this range next week. That means we have basically 556 and a half up to 561 and a quarter. Roughly that area is going to be probably the consolidation range for the next 2 or 3 days, in my opinion. Okay, let's go take a look at gold. Gold is off of yesterday's highs, 25.49 right now. 5-minute chart. Let's go over here to 30-minute. And remember what I was talking about with gold is that I had indicated that once we got up into the 25.50, 25.60 area, I think I remember talking about 25.63 being a pretty good area to pull profits, and that we may see some labored upward movement. Now, gold, if we come over here and here and here, gold is entering into this rally phase today. Today's the 21st. We're in a rally mode. Yesterday was a breakaway that didn't happen. Then we have a pause and we have an inside breakaway. So we're moving into a rally phase here in gold. And given where we're at here on this 30-minute, the rally phase, I suggest, will likely move again from where we're at, 25.49. We're right in this area here. The rally phase would likely attempt, if we see it continue, attempt to try to break above this high and attempt to possibly go up into the 25.75, 25.80 area. So if we get a good rally here, not saying that we're going to get, a solid $20 move today, but if we get a good rally and carryover, the next move here is going to be up to 25.80. And let me try to spread this and spread this. So really remember that 25.80 area right up here is the next area we want to go. We need to see this move above this level, 25.70, up into this 25.78, 25.80 area. and that would be on target for gold. Now, remember, we have the same type of scenario. We have peaked, we have consolidated, we do have a rejection area cleanly across this area, and we do have a rejection area here cleanly across these lows. So we need to get above 2556, 2557 in order to get some real upward movement, and a move down below 2543, call it 2542, would indicate that we are moving back into consolidation and weakness. That's really this level here, 2537, 2538. So remember, gold is still struggling. When you look at the cycle patterns, you're looking at a yesterday should have been a breakaway day. Monday should have been an inside breakaway, which is pretty solid. Today should be a rally day, and we'll see if this holds up. Remember, with the SPY, we are looking at today being a topping pattern in trending mode. So really important to see how today works out. And again, we're looking, if this pattern is correct, with a rally phase, we should be looking at a general market rally almost all day long, possibly up into this 2570 area, maybe a little bit higher. Okay, maybe not this aggressive, but remember, we do have this level of resistance to contend with today. Okay, so let's go take a look at Bitcoin. Bitcoin's up to 59, 380. Yep, my box is covering my price. I like price on top. And we're on a 30-minute chart. Remember, we had drawn a whole bunch of stuff over here on the daily, or I had drawn. And I know people laugh at me, but it works for me. So we're going to stick with it. So here we are. We talked about this potential move to the upside, talked about these potential moves. I'm going to get rid of some of these drawings and start over. We are still playing out in this sideways range here, and we do still have this flagging formation set up, and we are still flagging out. So we have a nice inverted hammer here. We do have this resistance up at 61,600. And we have this downward support here at around 57,000. This has been the key level. This 57,000 has been very key to holding this support level all the way back here. So it's really quite important that we continue to maintain support above this level. But in reality, folks, like I said, we're going to move into a moderate hedging. There is sometimes a correlation between Bitcoin and gold as a hedge. I talked a little bit about this yesterday. I do think Bitcoin is going to continue to play out to the upside because it is the in thing right now, and probably will be for the next 4 or 5 years. So we have an opportunity here to the upside, and I think this basing bottoming holds up. Now, we do have to be concerned about this flag formation. We do have an A, B, C, D potentially moving into an E pattern to the upside. But at this particular point, we have this apexing pattern here, right here, kind of in the middle, and this area right here gives us a middle level apex. Make that a little different color. Middle level apex price at 58,700. Would be, honestly, I would probably urge you to say that we need to stay above this level if we're going to have any chance of moving higher. You've got this middle range, this middle apex level right here. Set it up as bright green and green. And if we get below that 57,800 level and cannot find support, then we are probably going to fail to hold this level. and move downward. So if we get below this level here, we're probably going to move downward. Okay. And that's the real warning sign of this apexing formation. If we cannot hold above this level, this range right here on this apex move and see momentum to the upside, then price is going to attempt to take out a new low, and a new low would indicate a price level here, and then ultimately a price level down here. So if we cannot hold this level and attempt to move above this high, then we are going to move downward, folks. It's very simple. Price must always attempt to take out a new high or a new low. So we are flagging, we are apexing, we have a recent low here, we have a recent high here, we have rejection points up here. If price cannot take out this high, then it's going to attempt to take out this low. And if it is successful at taking out this low, then it will attempt to move down here to this low. So understand that we have to break out one way or the other. We have to break out. That's the way it is. Okay. And that means that we should be biased a bit to the upside. I think we're going higher, but I think we also have a risk of a big breakdown. I think there could be news. So I would urge everyone to stay cautious. I do believe the real reality is we're going higher, though. That's my belief right now. But I remember price is what tells us what is going to happen, not my belief. So I tell you what I think. I could be wrong. I'm human, but ultimately we look at price. So price, again, always must establish a new high or a new low. That's part of Fibonacci theory. That's the way price works. It must establish a new high or a new low. We really have a higher level, excuse me, up here that plays into the rally phase. If we get a rally phase, it's going to try to take out this high, then eventually this high here, then eventually this high up here. So you can see it's like blip, 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 rally right through these levels and higher. If it gets below this low, then it's going to come take out this low. There is another intermediate low right here, but if we've gotten to this point, we've already broken this low. It would go blip, and then there's a big gap, big opening between this low and this low. I mean, ultimately there is a low back over here, but you could count A, B, C to the downside. And that's where we have this risk. That risk really starts to come in below 56,000. As long as we stay above this 57,000 level, then we are biased to break out to the upside, which means we're likely going to go to 62,000, 63,000, and then eventually back up to 68,000. Okay. So very interesting next couple of days, but I think we could just consolidate into trending before Thursday, Friday, and early next week, moving back into a big solid trending mode. Okay, we're going to end with the SPY. There's our daily chart. We're expecting a topping pattern today, and we are going to just let things play out. Remember, this week was trying to position into the lows potentially that set up today, tomorrow, and Friday. Okay, talk to you later.